Welcome back to Homely Podcast, your go-to space for smart strategic property investment in Spain. Today, we're diving into less shiny but absolutely critical side of investing: taxes, financing, and legal structuring. What does it really take to implement your investment plan here in Spain, especially finding from abroad? To help us unpack all of this, I'm joined by Marc Soriano, partner at INVA Business Outsourcing, expert in business development, financial analysis, and funding strategy. Marc works really closely with international clients and help them set the right structures and avoid costly surprises along the way. Marc, welcome very much to the podcast. Thank you so much for joining us.
Thank you very much.
Before anything, if I could just ask you to say in your own words, what do you do INVA for international clients, and how often and how come you plug in property transactions there?
Thank you very much. First, thanks for inviting me to this podcast, only in Valencia. Okay, and our firm deal with foreign investors. We deal with people who has already bought a property in Spain, mainly in the Valencia area or whatever, or they planning to buy a property in Spain. Okay, and so we assist them if we can before taking the decision of investing. Otherwise, we'll try to help you as much as we can with all the surprises that they find when they don't have already bought it. Okay.
And I'm pretty sure there are plenty of surprises along the way because all countries work differently.
Yes.
Okay, well, thank you for that. So, for example, when we speak to clients, many British investors are used to buying through limited companies in their home country. Does that approach apply in Spain as well?
It depends. I'm afraid that I'm going to be saying a lot of these words. It depends. Okay, it doesn't make much sense, in my view, to incorporate a limited liability company in Spain to buy a property if your property is going to be your holidays residence. It's going to be resident in the future because you're moving to Spain. Otherwise, is that you want to make business out of that property. For me, that's the key point. To decide to invest into incorporating an SL, as we say in Spain, because otherwise I don't see much advantages on doing that, because you've got expenses in incorporating. It's expensive to keep it going because you need to do an official accountancy, you have to file tax forms, you need local accountants. It's more expensive. It makes sense, in my view, if you're going to have a business out of that house, that property, or your investment is going to be substantial. I mean, you're not going to buy just one property, you're going to buy 2, 3, 8 properties. Then it's a completely different approach.
Okay, so that's really interesting what you're saying. Most commonly, though, we hear about the mixed model. So we have clients buying their dream property, but while they're not here, they are thinking of subletting that. So aside from even tourist visa, but even having somebody living in the apartments, let's say 6 months a year and renting it out, would that still be the case for the limited company?
I would not suggest to do it on that case. I mean, when I'm talking about business, it's like starting a real business. You're buying a property in Spain that you're renting it not for vacational occasions for third parties, something like that. No, you're renting something that is going to be an office. It's going to be someone just setting a business in that property. Okay, that's the way I find it. Because certainly when the best pro that having a company is the liability. Okay, liability is what really it's protected when you've got a company. But if you're going to use the property for your private use, or you're just going to rent it for short terms, or even if it's for just renting for private uses, not business, I don't see big advantages on incorporating a company in Spain. But as we say, if the client wants to incorporate a company, I will explain that to them and they will decide.
Okay, fantastic. Well, thank you very much. So you mentioned liability as the pros of doing it. Like, are there any pros and cons as well that the client should consider?
Well, one of the pros I found in my experience is privacy. I think it's something that no one thinks about it. But I met in my 25 years career in this business, I met a couple of clients in which it was more important to them to have privacy about not knowing that they were the owners of this. I was talking about big villa somewhere in the south of Valencia. Let's put it this way, because land registry is public. Anyone can go there and ask for a certificate so they know. So that's another thing about having a company that protects your privacy. Okay, that's one thing. Cons, as I told you, it's expensive. Okay, certainly for the UK citizens, incorporating and establishing a company in the UK is very simple, very quick. We've got some systems now that it's fast as well, but it's much more complicated. It's much more expensive. It requires to go to a public notary. Then, as I told you, you need someone like me. You have to hire someone like me that I'm going to charge you every month for doing the bookkeeping, the accountancy. You will have quarterly and annual tax obligations. You will have to file documents to the company's house in Valencia or Alicante, wherever you buy the property. You have to put that in the balance. It's not that you're just paying for the property, but because you're going to have a regular expense on that.
Okay, well, you have a dream and then there's a price for that dream, as I see. So just deep diving a bit more on the cost. So in that case, is there any difference still whether the investor is from EU or outside of EU, such as UK or USA?
Okay, I mean, EU investors, everything is simple with them. We go in terms of bureaucracy. You know that now, one of the things that maybe many people who's considering to buy a property in Spain is that the first thing they need to have is a Spanish tax identification number. If you don't have that INIE, that's a word that many of my clients they just came across when they found the property and then they decided, no, you need to get a NIE before doing anything. Obviously, for European Union people, just getting all these papers, it's simple. Just even to establish a company, it requires things, different kind of documentations. And if we're talking about residency permissions, and that's far much complicated for non-EU citizens and investors.
So again, we're going back to the point. It depends, and it's best to speak to you to evaluate the case, right?
At the end, I'm afraid that every client has their own things. Let's put it this way, issues, and they've got an idea. The most important thing in my view is that the investor has a good idea what they want to do. That's because if they have this idea, say, I want to buy this property because I want this to be my holidays house in Spain. Great. Then we take this path. No, I want this to be the beginning of a investment project in Spain because I want this. No, or I want to buy this property because I want to have a hotel. It's completely different.
I think many people find it very enlightening to start with this very basic question, what you're going to do with that property. And that's what we come across. So thank you for clearing that out even more. And then coming back to this vision, okay? So there are many cases of investors that are selling their assets and their properties in their home countries to fund the property in Spain. So what are these 3 tax lenses that they should review before, sending out the money and taking first steps?
Okay. First, I mentioned advance. First thing is to get the Spanish tax identification number. That's the most important thing. Without that, you cannot have a Spanish bank account. You cannot go to a public notary to sign the purchase documents. You cannot do anything. That's the most important thing. And then I'm glad that we're moving in what's my expertise, that is taxation. It's very important because you're making this decision is that tax residency, it's a key issue. It's, in my view, as tax consultant as I am, it's not the same selling your properties if you're tax resident in the UK in that year that if you're tax resident in Spain for that year. Okay, so my advice for everyone is that you're planning to do an investment in Spain, and basically if you're moving into Spain. Okay, here, once again, it depends. It's not the same. I'm selling a property in the UK because I'm going to buy a second residence, but I'm keeping my tax residence in the UK. That say, no, I'm selling my properties, my assets in the UK because I want to move to Valencia. We're really fashionable now. Okay, and that's very different. The timing, it's very important. It's not the same to sell your property in the UK if you're a UK tax resident or if you become a Spanish tax resident, because taxation will take place in the country where you're tax resident. For instance, I've got many Americans, US citizens that they're moving in, and taxation of the sale of their main residence in the US has a very good taxation in the US. If they decide to sell it once they're already in Spain, that house will be taxed according to the Spanish tax legislation. And it's not the same. My main advice for these people who's considering to move in, not buy in a second, okay, move into Spain, is sell the house before you become tax resident in Spain.
Okay,
It's very important. You save a lot of taxes there.
Okay, that's really interesting. And also, when you were talking about the taxation period, like, is that anything else they should also consider? That, make sure you don't purchase the property in March because that's a critical month, let's say. Or is there anything else that they should consider?
No, the thing is that becoming tax resident is tax. Once again, it's very dull, it's very boring, but the keyword is tax residency. Tax residency is where you're going to be paying your taxes. If you become tax resident in Spain, means that you're going to be paying taxes in Spain for all your worldwide income. Doesn't matter where you get it. UK, US, Spain, doesn't matter. You're going to be paying taxes on all your income here. When you become a Spanish tax resident, for sure, if you spend more than 183 days in Spain in one calendar year, it means you can buy the property. Taking your example, you buy the property in March 25, but you don't move into Spain until December 25. It means that you're not going to be a tax resident. So it means that you're going to have a property in Spain. It's got a different taxation. You're going to be taxed as non-resident, but that's completely different. But if you buy the property and you move in March, as you're going to spend more than 183 days in the calendar year in Spain, by the double taxation agreement between UK or US and Spain, you will become a Spanish tax resident. Even if you keep your business, you keep your job and anything, that's the first thing that the double taxation agreement says, 183 days.
Okay.
I know. I discourage a lot of people when I explain these things.
Yes, but I think that's a very key question, and I think some people can still not be aware of that. And then what happens then if they buy the second residency? If there's any trick, for example, because like my understanding is, if they sell a house, or let's say back in Poland, one of they have two houses, a home and then a second residence, exactly, and they say one flat to exchange it for another in Spain. Is there a trick to deal with taxes? Because then they'll be paying taxes in Poland and then they'll be paying taxes in Spain.
There's an investment in a second property in Spain. I mean, you keep your main residence in Poland or Germany, wherever, and you decide to have this, as you said, you find this dream place for having your time, your holidays, and this second house is subject to taxation in Spain, but as non-resident, okay? All countries in the world, all states in the world, they want to tax real estate properties. It doesn't matter. I mean, UK does it, US does it, Spain does it, of course. So if you buy a property in Spain, but you're not tax resident in Spain, you will end up paying a tax on that property. Either if you rent it or you just keep it for your private use, okay? In both situations, you will be taxed just for the mere circumstance that you own a real estate property in Spain. That will happen. It's a completely different taxation. It's very straightforward. It's very simple, but you've got the obligation. And this is one of the obligations that many people buying properties in Spain just for recreational, for holiday purposes, they forget that they will have this obligation.
So that adds additional costs to the properties. Okay.
It's very simple. It's a non-resident income tax that you have to file once a year. And it's a tax that's calculated on the cadastral value of the house. You're in the market, you know that the price you pay for the property and the cadastral value there's a huge gap between, and maybe you end up paying maybe 300, 500 euros per year as non-resident income tax. But you will have the obligation to do that. Completely different thing if you rent it. Okay.
Great. So, okay, that clarifies a lot. Thank you. And I think many people, many listeners will find it very interesting. Now I have a tricky question for you, because a friend of mine, so he has a couple of properties in the US.
Okay.
He now lives in the UK, and he's a tax resident now in the UK. And he wants to sell properties in the US to invest in Spain. What would you recommend him to do? What are the key steps to take at the very beginning to assess?
First, what you want to do with the property that you're buying in Spain? Is that
make money? Make money.
It's just an investment.
Just an investment. Yes.
Okay. He's not planning to move into Spain, so Okay, he's going to sell the properties in the US. First thing he has to do, let's go to contact with the closest consulate where you live in the UK, Manchester, London, wherever, and get an NIE number. NIE number is a Spanish tax identification number. Okay, and then you need to contact, obviously, not only people who's going to help you with all the property searching and finding the right spot. That's very important, and being in the right hands. But also, once you're in that situation, you will find out that you have to go to a public notary. You will have to do a lot of papers. And then when you finish, okay, congratulations, you own a property in Spain. As I said, just by the fact that you bought a property, in that same year, you're subject to the non-resident income tax. So it means that at the end of the calendar year, you will have the obligation to declare that you've got this property in Spain, and you will have to pay a tax on that. So you will have to find someone like me. That's one of the things that I do on a regular basis, okay? Just to help my foreign clients to file their non-resident income tax. Then your friend might have two options. Is that, okay, I keep the property. I bought this property as an investment. I bought it for 250,000 and I put it back in the market, or I'm going to keep it like that. And I'm going to rent it. And in 6 months, 10 months, I'm going to put it back in the market and see if I can make a gain. That's one option. Other option is that I'm going to rent it. Okay. Both situations are subject to the same tax form. But and then what happens with your friend, unfortunately, is that he is tax resident in the UK. So he's not treated as well as an EU tax resident. That happens, okay, because EU investors had a very different and profitable taxation that UK, Canadians, Australians, anyone from outside the European Union. Okay. But he will have to do that. At the end, he has to go to look for someone who helps him to file the annual tax forms. Because the surprise comes when, imagine your friend has had the house for him. He's invested and he's enjoying coming over here. Even he's managing the homework from the property here in Valencia for 3 months every year, something like that. And then, but he didn't call me. He hasn't called me at all. He doesn't know me at all. And then he realizes that in 4 years, he decides to sell the property. And then he will find out that he has to declare the capital gains that he has on the sale of that property. And that's something, that information automatically goes to the Spanish tax administration. And then the tax administration said, hey, you had a property here for many years. So please, I want the taxes from the last 4 years, plus penalties, plus sanctions, plus interests. And this is something that very easy they can avoid just by filing one tax form once a year and not a very high tax, unless you rent it. If you rent it, you will have to pay accordingly to the rental that you're receiving. Okay.
So again, going back to specialists, to being in the right hands, to finding Marc and being able to be guided to avoid any surprises and taxation. So
yes.
At least we know there is a solution. So I hope he'll be listening, and I'll be sending him this piece for sure. Okay, great. Thank you. Thank you very much. You mentioned as well, I don't know if we can clarify also to giving the numbers. You mentioned that EU investors are treated differently than investors from outside of EU. So what typically changes in terms of taxation?
Okay. Yeah, first of all is the tax rate. European Union investors, citizens, tax residents, you don't have to have a citizenship here, it's the tax residency. They tax 19% of the income that they have in Spain, while other residencies, they tax 24%. When we find that's a relevant difference, but most important difference is when you're renting the property that you have in Spain. That for EU investors, it tax on their net rental. I mean, all the tax deductible expenses that they might have throughout the year, they reduce the taxable base. So, example, you're renting a property in Spain for 1,000 euros per month, 12,000 euros income. Great. And then you say you've got someone from Poland, from the Netherlands. When I come to calculate the tax form, I said, okay, what's the local tax that you paid in this year? How much is the expense that you have in the insurance that you paid for the house? How much is the utilities that you paid for the house? I will calculate the depreciation of that house. All those expenses will be deducted out of the 12,000 rental income that you had. And let's say if we put it that all this expense, it's been just to make it easy calculations, because sometimes I make a mess with all these things. Let's say that this expense is 2,000 euros. They will have 10,000 euros to be taxed. 12,000 income, rental income of 2,000 expensive, they tax on 10,000. 19% of this 10,000. That's 1,900 was tax that they pay. Perfect. Okay. What happens if you're UK or US? 12,000, yes. You're paying 24% of the 12,000.
And that's
no
it.
expenses,
no discount, no deductions.
Discounts, nothing. It's straightforward. 20% of the gross income that you're receiving. And that's it. That's the biggest difference. I know I read the other day that some of this on dispute and might change, but changes in the Spanish tax legislation take time and they complicate it. So up to today, the situation is very different if you're renting an apartment and you're a EU tax resident or non-EU. 24% of the gross income or 19% of the net income. And I can tell you, depending on the property, depreciation could be good 3,000-4,000 euros if you have. So it can really reduce. Someone from non-EU is going to be paying 24% from the gross, from every income that they've receiving. That's a big difference.
Thank you very much for this visual example. I think it sits now with everyone. And then we are celebrating our EU membership, all our investors, I'm sure. Thank you.
I don't want to discourage anyone, but my job, I'm afraid, is to explain things the way they're going to find them.
Exactly. And better to avoid future penalties as well.
Yes.
So the good thing is you can get a lot of income, and the rental opportunities are fantastic here along the coast. So yeah, still there is a lot of encouragement,
Yes.
stable market here. And I was wondering still if we could touch upon this like double tax treaties you mentioned before.
Yes.
Again, just to have a more clarity of how does it work in practice for rental income.
Yeah.
And capital gains?
Okay, basically, mostly all the double taxation agreements, treaties, they work in the same way, okay? Basically, if you're tax resident in UK and you're getting a rent that is taxed in Spain, as I explained to you before, this rental is going to be taxed in Spain because you've got the property in Spain. Basically, all the UK double taxation treaty says that any tax that you pay on the income that you receive for the rental and you pay in Spain will be a tax credit when it comes to declare your tax to your UK taxes. There's no such a thing as double taxation because the same scheme is that, of course, if you have the obligation to pay taxes in the country where you're not tax resident, I'm going to make it with an example. I'm a UK tax resident and I buy an apartment here in Valencia and I'm renting it. And as in the example, let's say I've got a 10,000 euros rental, so I'm going to be paying 2,400 euros tax in Spain. And then in April 2026, I will be filing my taxes in the UK. So I will have to declare that I had a 10,000 euros income for the property I had in Spain. And that income will have a taxation in the UK, let's put it, let's say, of 2,500 euros. But then when I'm filing my taxes in UK, I will have to say, yes, but I already have paid 2,400 euros in taxes in Spain for this income. So I will pay in the UK only the difference. In this case, will be, in this example, it will be just 100 euros. It's not that you're paying 2,400 in Spain plus 2,500. I'm afraid that usually for UK tax residents, it's all the way around. You pay 2,400 here, and maybe you have to pay 1,500 in UK. That means that you will be paying zero taxes for that income in the UK.
Okay, thank you. Yeah, no, it sets in perfect. No, I think
and
that's what we were saying. With examples, it helps to clarify the
and with capital
definition
and with capital gains is the same because they treat exactly the same. Whatever capital gain taxation you pay when you sell the property, let's say you bought a property here for 200,000, you're selling for 300,000. That means that you're going to have a 24% tax on the capital gain. That's 100,000. So the tax is 24,000 euros. Okay. Now you declare that capital gain in UK, but you have to say, hey, before doing anything, I want to inform that I have already paid this amount in Spain, and that will be deducted from my UK taxes. It works the same. It's the same with the US and Canada. Some double taxation treaties are kind of different, but in general terms, they all work the same with these things, especially within the European Union. The Netherlands is a bit different, but
Really? Okay.
well, Netherlands, US, they've got the peculiarities.
I guess in any case, it's always good to look for the advisor to guide through, because again, it can become a complicated process.
Double taxation treaties are complicated documents, and it takes me every time I have to go through them and read them carefully because they're tricky.
Okay, great. So now moving on to a slightly different topic. When we're talking about succession, like many clients say, okay, we're just buying it, okay, as an investment, but not for ourselves. We want to make sure that our kids will inherit that in the future. Is there anything specific we can cover about Spanish inheritance law and succession planning?
Okay, here my main advice is just make a will before you're moving into Spain. If you've got a will in your country, in your state, that overrules the Spanish inheritance law, because the Spanish inheritance law is very peculiar.
Complicated?
I would say yes, because it's very, very simple. You've got your assets and you've got divided into three parts. One compulsory goes to your descendants. The second part, you can better off some of your descendants. And the third part is the one you can do whatever you want with it. But by law, there's 2/3 that they go straight forward to some people. That's what the Spanish law says. The way to avoid this kind of situation, that I know it's very, very different in the UK and in the US, is I've got a will done in London or New York or wherever. It applies also to Germany, in wherever, before you decide that, okay? Because that applies. Then it happens that obviously there will be inheritance taxes to be paid in Spain, because as long as the property is in Spain, as I said, and that's it. I mean, if you've got a house in a country, that country is going to charge taxes for whatever reason. So they say, and it's complicated. It's not an easy tax to file. It requires that even people more specialized than me. Okay, I've got in INVA BPO, we've got people who specialize in inheritance, and we've done inheritance taxation in sometimes when the properties are in Spain, and we have to file the taxes, and sometimes when the properties are abroad and the people who's inheriting it's in Spain, because it's complicated. We're working in both situations, but it's complicated. But best option for people who's moving into Spain and who's having a property in Spain is just make a will before moving into Spain.
Great piece of advice. I don't think many people will be thinking about it, especially if they're buying and still seeing themselves as young, but definitely great piece of advice.
That happens to all of us. We're still too young for doing these kind of things.
Exactly. Great, Mark. I mean, just a couple of questions. I know you mentioned the NIE, but also if there's like a one-page checklist that you would give to an early stage investors, what will be on it? A couple of things that,
First is, want to insist again, the number. Is that I've been in the situation that I have to rush to the tax agency to get an EA number because I had the people work almost sitting in the public notary because they were doing something, or they were incorporated in a company and it's impossible. Then is that you're aware of all the taxation and all the procedures that you've got once you decide to buy a property. I know people in Homely Valencia and professional real estate agents, there's this 10% tax, and then you've got the public notary expenses. Roughly, we say that when you're buying a property in Spain, you have to add roughly 15% expenses on the price that you're paying, roughly. You have to bear that in mind. And then, once you've got that and you reach the point is that then you need to know that you will have to pay taxes in Spain. I'm afraid it's not that this is my business, but that's the reality. Okay, so you need to sit down with someone that helps you explain to you. It's not very complicated if it's well explained, obviously, but bear that in mind, because you will have your annual local taxes that it's paying to the city council, and many people think that having done that, they have no other obligations. You will have them. If you need to know how the value of the house has to be declared, because then it changes when you decide to sell it. It's not the same, the price and the value. All these things, you have to take all these things into account. It's just to check. It's 3, 4, 5 things, no more than that. And first one, Spanish tax identification number.
That's clear. And out of curiosity, Mark, what's your take on why even obtaining NIE is so complicated these days? You know, especially in the touristic cities. I mean, as much as you can share, that's what we're trying sometimes to tell our clients, that it's not so easy to book a specific date and time as they imagine.
Can I be blatantly honest? It's a nightmare. It's a nightmare. Lately, I just advising people just to go to the Spanish consulates and get the NIE before coming into the country. Okay, sometimes it's easier. I know sometimes it's not easy to get an appointment. Maybe in big cities, big countries, I don't know. But lately, I managed to have someone doing it in the Netherlands, and they took them just 3, 4 days just to do it. And in Belgium, it was quite quick as well. But it's a nightmare, and it's the bureaucracy. And there's a fight between different levels of the Spanish administration. Not a fight. They're not agreeing who's responsible for issuing. I had real fights with different levels of administration to get it, because for someone buying a property, it's a problem. But I've been in the situation that it's how to incorporate a multinational companies trying to incorporate a subsidiary company in Spain, and the general manager of the company requires an year, and we cannot do it because we cannot get the NIE. We try. We know that in some villages you can go and do it. At the moment, it's very, very complicated. It's possible to do it sometimes. I mean, I was going to say something, but it's consulate. Go to the Spanish consulate. Arrange an appointment to the closest Spanish consulate wherever you live, and try to get the NIE there.
It's like, I mean, honestly, we've been dealing with the same. I mean, we have a couple of contacts in some of the local police stations outside of Valencia when, we can actually arrange and go through it. But in general, this is the information we're trying to trespass to our clients.
Yes.
Saying, like, look, it's not that easy. Oh, I know you are in Alicante, but it's not that we can get a next day NIE for you at 9:30 in the morning as you would like to. So
it's very complicated. It's very complicated. And there's one other thing that's very important, is that it applies for the people who moves to Spain, or for people who decides to invest in Spain and as investors and keep being non-residents. We've got, I know but I don't know if our listeners, they know that we've got the digital certificate. The digital certificate, that's that digital signature, whatever we're going to call it, we call it digital certificate. That's a very useful tool to help residents and not residents to deal with any levels of the Spanish administration. It helps you to deal with the tax agency, it helps you to deal with the Valencia City Council. It's very useful. It helps you not to miss any notification that you might receive from the administration. That's very important to get it. If you're becoming a Spanish resident, obviously you need it for many, many things. But even if you just investing in Spain as an investor, or just to making a revenue, or you're just investing in a holidays property, I strongly recommend just to go through the process to get the digital certificate. Keep it yourself, hand it to someone that you trust, that it will help you on your daily duties or notification that you might have from any level of the Spanish administration. It's very important. It's very useful for the people we're working with, non-residents.
When you're saying handing it over to somebody, it means that it only works on Spanish territory, right? Like you have to be connected, or
no.
Okay.
No. I mean, it's like you've got. I mean, it has to be someone you really trust. Okay, because this is a really useful and power tool. But no, you can have it. You install it in a laptop, and you can be in Manchester or in Edinburgh.
Okay,
and log in there. But sometimes it's okay if you manage to do it. One of the problems is that many of the Spanish websites and Spanish administration websites, they've got the banner, they say English. And when you click, the screen changes and still in Spanish.
Yes, we all been through that, yes. And then usually... And usually in Valencia, it's even Valenciano to start with. So it's even more confusing for those taking first steps in...
No, I mean... Just a brief example, there's someone who buys a property in Spain, for sure is going to pay the local IBI tax, okay? Impuesto Bienes Inmuebles. IBI, it's a local tax that you pay to the city council, okay? Something as simple as saying, I want a direct debit of this tax on this bank account. can be done through this. Using this, you don't need to walk to the city council, ask for an appointment. You do it online. And with that, and that's an example of someone who bought a property, is living in Poland, and it's not coming to Valencia maybe once a year or every twice a year. With that tool, or she can log in into the Valencia City Council and say, oh, I'm going to change the bank account, or I want to do this or that. Very straightforward, very simple. Problem, as you said, Magdalena, maybe you will find it's in the Spanish or Valencian language. So if you've got some local with access to that tool, obviously someone do you really trust, okay? Just don't hand it to anyone, okay? But it's really helpful.
I think what you said there is really, really important. And I think like not very often we consider that. And probably we should be actually adding it to our list, because we currently accompany our clients to help them open a NIE, like to obtain the NIE number.
Yeah.
But I think the following steps would be actually to get also this digital el Certificado Digital.
Yeah.
So that they fully equipped moving forward. So this is a really good tip. I'm even writing it down not to forget. So thank you. Surprise question. So I hope it's gonna be okay. If not, we can cut it after.
Okay.
Maria sent it over because she said she had the question.
Okay.
Impuesto sobre el patrimonio en España para no residentes.
Non-resident wealth tax. Okay. As I explained to you, there's one thing that's called the non-resident income tax. Then we've got the non-resident wealth tax. Okay, it only basically applies for real estate properties. Example. Let's go to examples. Very simple. You and me, we're residents in Amsterdam, and we found this wonderful villa in Mallorca. It's 1.2 million euros, and we buy it. Perfect. We don't have to file any wealth tax because there's a threshold. There's a tax allowance of 700,000 euros per person to be subject to the tax. Okay? But instead of 1.2, let's say that we see a house that it's 2 million euros and we can afford it and we like it and we bought it. So we've got a property in Spain that value of 2 million euros. So it means that each of us, we've got 1 million wealth in Spain. So we'll have to file the non-resident wealth tax. What will be the taxable wealth? 300,000 euros. Because we each, okay? 2 million euros the property. So as we bought together, 50% you, 50% me, we've got a wealth of 1 million each. Tax allowance, 100,000. So it means that 1 million, I will be taxed 300,000, exactly likewise you, okay? Wealth tax rates are not very high. I mean, it moves between 0.25 onwards for the first hand. That means that you will have the obligation to file it, and maybe you end up paying maybe an annual tax. In this example, for 300,000, maybe will be around, let's say, 700, 1,000 euros per year. Something that if we can afford to buy a property for 2 million euros, if you think...
Be a problem.
It's very simple at the end. I used to, as Valencia has changed the threshold now. I do quite a number of wealth tax for people who's residents in Spain. At the end, in this example, we have 2 million wealth in Spain in a house in Mallorca, and we end up paying 2,000 euros wealth tax. That's, as far as I know, it's 0.01%. That's the taxation of the wealth tax, would be. So obviously, if you've got wealth over 10 million euros, 12 million euros, yes, you've got something. In the Valencian community, for non-residents, tax is filed in Madrid. It's a central tax for non-residents, and it applies this threshold. This is important thing, but it has to be over 700,000 each person.
Very interesting. I'm really glad I asked this question. Thank you, Maria, for sending over this question. Very interesting. Well, thank you, Mark. Well, I won't be squeezing you anymore. So, this is the wrap for today's podcast.
Okay.
Thank you so much for sharing your insights and for giving us such clear examples. I think, it was easy for everyone to really digest. I guess like some of the things will go on repeat and rewind and then making notes. But if not, we know exactly who to go to contact you directly, Mark. Obviously, for anyone listening, if you're interested in contacting Mark, please do let us know, and we'll be forwarding your insights directly. Especially, if you are moving funds from across the border, selling assets, you're not sure how to file any income taxes and what to do with your property investments. Mark and his teams are here to be your truly valuable partners. And of course, at Homely, we are happy to always direct you to Marc and to other trusted partners in our ecosystem, whether mortgage advisors, lawyers, tax consultants, architects, to make sure your investment process is as smooth and as perfect secure from the day one. Stay tuned for any upcoming episodes. There'll be a lot more coming very soon. Just subscribe, and we really hope you enjoy this episode. Thank you once again, Marc, for your valuable time and insights.
Thank you very much for me and the INVA team, for this opportunity, and looking forward to collaborate with you whenever you want to contact me. Thank you very much.
Thank you very much. Bye-bye.
Bye.